borrowing has not gone up from the last 2 months or 3 months. So that also has helped us. Overall, we're able to raise resources at the current level, in the sense 3 months back level. Plus, we are also repricing some of the older loan, which were at higher cost as and when it's maturing. Especially 80% of our borrowing is in the fixed tenor and fixed rate, and only 20% is floating. So floating gets changed immediately whenever there is a repo rate change, but the fixed one changes only when it gets matured.
Right, Mr. Revankar, this is Vinny joining in the conversation as well. What I want to ask about is your disbursement growth. That has been strong this time around. Now, how should one actually view this in terms of the risk on this incremental book, and will the credit cost actually continue to trend lower then?
Yeah, definitely the disbursal is very strong. The demand in a commercial vehicle, two-wheeler, especially last quarter, was the festive period, and therefore the demand for two-wheeler was very high. And the rural demand has come back very strongly. The tractor credit, even though we do only mostly used vehicles, the demand in the rural area has come back very strongly. And commercial vehicle continues to remain very strong, because as the infra spend continues, there is a demand for CVs, especially both new and used, and we are able to cater to the demand. So I think the growth is looking good even in this quarter. And as far as the credit cost goes, since the vehicle utilization levels are very high and resale values of the vehicles are quite good, the credit cost automatically comes down, because the risk of non-payment is less. Plus, the requirement of repossession also is very minimum. With that, the credit cost is coming down. I think it will remain steady at around 2%, which is our long-term history of 2%. We are just below 2% now. As for the first 9 months, it's around 1.94. We should be able to maintain at this level going forward for the considerable long time.
Right, Mr. Revankar. Do you actually plan to raise any money from the market, given the new amendment for the interest on market-linked debentures? So do you see this as an instrument as a concern going forward?
No, that was, we did not use this instrument extensively. It is a very, very short, small portion of our borrowing. So we will not be impacted by that. We can always have other private placed NCD. We need not really go through MLD essentially.
Okay, Mr. Revankar, thank you so much for joining in with us on ET Now this morning and giving us your insights on what should we be expecting from the company going forward as well. That is Shriram Finance for you all. As of now, the stock is trading with a decline of 1.8%. But on